All right, everyone, welcome to the Hurley Investments market commentary of May 17th. Pretty fun stuff for you today. Nothing out of this world, but some things I'm kind of excited to talk about. Good to see you, Abraham. Good to see the rest of you guys. We've got the usual group. I'm happy to see you. All right, so just to give you the market recap, S&P fell 1.4% last week. Consumer discretionary technology leading the decline. For us, that meant Apple, Disney. Worries about increasing consumer and producer prices. Benchmark ended at 4,173, down from last Friday's closing. 4,232. It's even down slightly from there today. As you notice, you might see down here. So 41.63 today. But it did bounce right on that pivot point and come right back up. On the 41.30 level. Despite this week's drop, the index is up 11% for the year. Drop last week's record levels came as data showed with both the U.S. consumer price index and producer price index rose by more than expected in April. Obviously, the reports raise concern about inflation, which investors fear could dent companies' margins and lead the Federal Reserve to end its easy monetary policy sooner. Fed officials have said inflation is transitory, but investors' worries remain. And that is the problem. They say don't fight the Fed, but people really are fighting the Fed right now, which is what adds to the frustration and kind of the nonsense we're dealing with right now. Not that we won't have to deal with this inflation later and long term, but they couldn't have done a better job explaining that they're not going to be raising rates and that they're going to be letting inflation run hot. Reading on, meanwhile, progress continued in the U.S. on the COVID-19 front. Federal health officials saying fully vaccinated people no longer need to wear a mask or physically distance during outdoor and indoor, or indoor activities, large or small. 46% of American adults are fully vaccinated, according to the Center for Disease Control and Prevention. You know, I guess it's whether or not we really trust these vaccines. It's kind of nice that they're finally saying, yeah, people that have had the vaccine don't need to worry about any masks. Kind of silly for a while. They were still saying to double up and have your masks outside even if you're fully vaccinated. Just kind of got a little ridiculous. So I'm glad to see that a little bit more reasonable take coming from the CDC. The rest of it is basically which sectors got hit the most. Obviously, I kind of mentioned that, tech and whatnot. On the upside, consumer staples, financials, materials. We talked about that Thursday if you guys were here, on what has kind of led the market up since it hasn't been the FANGs. But if you notice, these are really pretty small increases compared to these decreases from last week. 3.7, 2.2 technology compared to these 0.4, 0.3, 0.1 ups stocks. Obviously that makes sense since last week was a down week, but you know, kind of makes sense. I'll let you guys read the rest if you're interested. And basically saying upcoming is housing, a lot of housing numbers this week. Today, let's see, the National Association of Home Builders Index, which was unchanged, that came out today. So let me get on with it. I want to talk a little bit about book value. Can anyone give me a short description of what book value is or how you understand it? Just to see what you guys understand. And I should say book value per share is how it's usually referenced. Anyone want to take a quick stab at explaining that? Not looking for much, just a simple idea. So I'm not seeing anyone type anything out. So let me just go ahead. I think the most simple explanation is what a company is. Get this out of the way so I can see, is worth if they sold all their assets right now. Per share is obviously the book value, and you divide it by the outstanding shares of common stock. So let me go, I found this little page that talks a little bit about it, just to give you a little education before we check out some interesting numbers. So I'm just going to read a little bit. This was from the Balances MB, this little website, small business. I'll put a link here as well in just a minute. So the book value per share is a ratio that weighs stockholders' total equity against the number of shares outstanding. In other words, this measures a company's total assets minus its total liabilities on a per share basis. So what is book value per share? Book value per share is one way of gauging the value of a stock. To better understand book value per share, it helps to break down each aspect of the ratio. The book value is the total equity or net asset value of a company. Since public companies are owned by shareholders, this is also known as the total shareholders' equity. The book value includes all of the equipment and property owned by the company, as well as any cash holdings or inventory on hand. It also accounts for all of the company's liabilities, such as debt or tax burdens. To get the book value, you must subtract all those liabilities from the company's total assets. These values will be found on a company's balance sheet. The share aspect of the ratio refers to the common shares of the company. These are the stocks that can be bought or sold on an exchange. Breaking down the book value on a per share may help investors decide whether they think the stock's market value is overpriced or underpriced. So going into how it's calculated, are we all together here? Any questions so far? Following along? I think those were pretty simple explanations. How do we calculate it? To calculate the book value per share, you must first calculate the book value, then divide by the number of common shares. Also, since you're working with common shares, you must subtract the preferred shareholder equity from the total equity. Otherwise, the book value per share would be inflated and inaccurate. So, book value per share is equal to shareholders' equity minus any of the preferred stock equity divided by the average number of common shares. Yes, Bill. Bill also said to check out Investopedia. Very good resource as well, Bill. I don't know why I end up on this one, but I did. But I'm sure Investopedia will have just as good, if not a better, explanation for those of you who would like to check that out. They usually have nice little cartoon videos that are simple explanations. Nice too. All right. So how does it work? Generally, the book value per share is used by investors, especially value investors. Hello, we're value investors. We're little tiny Warren Buffetts. Bill, I'm more like you. I do need the pictures too. Visual learner over here. Since I've got this up, I've got it up. Check it out on Investopedia if you guys still feel like you want a little bit better explanation or different explanation, I guess. If the book value per share is less than the price of the stock, then that tells an investor that the stock could be overvalued. It costs more than the assets it's entitled to. On the other hand, when the book value per share is more than the stock price, that means as an investor can essentially buy a share in the company's assets for less than those assets are actually worth. So let me make a more simple explanation. And usually that is, usually it's not less or more than the share price. Usually a good amount of book value is around 10% of the value of the stock. %10 of the value of the stock, I'll say price. So a lower number implies that something is overvalued. And generally a larger number implies stock is undervalued. If you think about it, it's on a per share basis, just like the price. If the value of a company on their assets and things that they have in business that they could sell today, basically, if that is a higher number closer to the share price, that means the share price isn't out of control, going to a ridiculous amount away from the true current assets, that the value of the assets that it has. Now, usually companies, usually the share price is higher. If it's not, maybe there's some big reason why. Maybe it might have to do with the company's assets, that people don't value them very highly, or something of that nature. Let's read this last bit. This just goes over the simple math. If you have $20 million worth of stockholders' equity and 5 million of preferred stock, they're just doing that as an example. You would just minus the 5 million from the 20 million, and average of million shares outstanding, just the amount of total shares. You take the 15 million, because we've minused out the preferred stock, divided by the 5 million, and it puts us at $3 book value per share. Now, it only really matters as you compare that to the share price. They probably mentioned that. And as you compare it to other companies, like companies in the same sector, industry, or whatever. So I'll say we get an idea of the value of a stock based on how the book per share is in relation to the stock price, and how the book per share relates to other companies in a similar industry sector. All right, this last little bit, yeah, that's about it. One limitation of the book value per share is that in and of itself, it doesn't tell you much as an investor. It tells you a good, important piece, right? Investors must compare the book value per share to the market price of the stock, which is what I just said, to begin to analyze how it impacts them. Kind of repeating myself. Another limitation is that book value per share is a conservative analysis of a company. It simply measures the present financial standing of the company. That doesn't allow for growth estimates. So obviously, the reason why companies trade at a higher price than what their book value is because people are pricing in, investors are pricing in what they expect the company to make in earnings down the road, right? So the market is forward looking. Growth companies tend to be a higher price per share, higher price to earnings, et cetera, because investors are expecting big profits and earnings and growth for the company. Last paragraph, book value also favors businesses with physical assets. Companies that store inventory in a warehouse can count all of that inventory toward their book value. However, tech companies that specialize in creating software don't have an asset that is stored somewhere, and they don't require expensive industrial equipment to produce their product. They may generate sales with that software, but there isn't a warehouse full of software code that investors can look at to gauge future sales. So that's kind of a drawback, but I would also argue you could probably you could throw in intellectual property, you can throw in the value of the digital assets they might have. So that's not entirely, I guess, completely true, but that does make sense where they're coming from. It's typically talking about companies that sell products, physical products, right? Well, all right. So why am I on about this book value per share? We've got Baidu reporting tomorrow, and as Kevin and I kind of discussed some things, it was really interesting. Take a look at some of the fundamentals here on FinViz for Baidu, and book value per share, $83. Well, I guess it's not dollars, but it is $83.13, trading at $189.20 today. So if you remember my reference, a really good reference for book value is around 10% value of the stock price. So let's just do a little bit of math here. You probably have already done it in your head from some degree. So 83.13 divided by 189.20. 189.20, roughly 44%. I'll say, why are we so excited about Baidu fundamentally? %, of the stock price can be added as book value per share. What was a good percentage? What is considered a high book value? 10%. 44%, 10%. That is amazing. Just take a look at operating margin. They talked about that in that, looking at it against other things in that article. So let's take a look at gross operating margin, 48.5%, operating margin, 13.4, profit margin, 20.9. So let's compare that to, let's look at Google I had up here. A lot of stuff that's not showing, so might be no good. Let's look at, even there, let's just look at their, let's see, where did my calculator go? Just a second, Abraham, I'll get to that question. So book value on Google is 342.74 divided by 2321.41. So what do you think? 0.14%? Not quite as good. Let's compare it to Apple. Apple, a very good sound, fundamentally sound company. Just some numbers to go with. Get back our calculator. 4.13. Kind of interesting, book share and cash per share. As you guys know, Apple has a couple $100 billion they have set aside they can buy shares with, just in cash. Divided by 126.27. So much better than Google, but 3.3-ish%. And that's a company that has a couple $100 billion in cash. Gross margin 39.9. Let me see if I can kind of scroll back and forth. Not quite as good as Baidu. Operating margin 27.3. So Apple's got them beat a bit on their operating margin against 13.4. Profit margin on Baidu 20.90. And these are just these numbers right here, guys. I could probably be circling these a little better for you, but 20.9. Profit margin a little bit better for Apple. So generally fairly close. Not quite on operating margin. But man, compared to those things, that's still pretty amazing. Couple questions. Abraham, you want me to do it against Baba? So let's do it against Baba. Keep in mind that Baidu owns a good chunk of Alibaba. See, they're trading at 211, so this is 53.70 over here. Book per share divided by 211.05. That's pretty high too. 25%. Some high numbers here as well. Needless to say, Abraham, there are some other things we like about Baidu more. low PE for a company that is earnings per share is up 800%. Compared to BABA down 2.2% this year. A little different picture there. So Abraham asks, how reliable are the numbers coming from China? Well, short answer is I don't know, but how much does that matter? I mean, let's look at this number. Insider owned, 15%, 5% more than Alibaba. What this means is that many of the government higher-ups in in China own Baidu. I really like that. That makes me feel really secure in Baidu, even if it's the fact that it's a monopoly they get to control and run. Monopolies tend to make a lot of money. I wish I could give you more or a better answer there, Abraham, but the numbers are what they are. It's certainly not the same as, something like China's economic numbers, where they count the same bushel of hay or whatever 5 times as it trades between one place and transfers between one place to the other before it's actually sold. So most certainly that's inflated. Most certainly they lied about their COVID numbers. But as this gets on an exchange of the US, it's definitely not the exact same as the accounting principles as, something as an American company, but it does have to stand to some pretty good scrutiny as well because they're on dual listing on Hong Kong. So those things definitely make me feel better. Yes, Bill, they're reporting on their numbers were down. The problem is they just count a bunch of the same stuff multiple times. So their overall economic numbers are elevated compared to if they would just account for things the same way as the US would. So yeah, it can be down. And those numbers might be accurate, but they're not necessarily, it's not added up the same way as it is in the US, which is kind of bullcrap. All right. So that was kind of fun to look over. Got those earnings tomorrow. And we'll see how those go. We got Costco coming up. That will be interesting. Some of that's consumer discretionary, a lot of consumer staples. Very interesting to see how that comes out. I guess that's next week, 27th. Guys, any more questions about that? Book value per share or Baidu? I would not be surprised to see Baidu on a good earnings pop $50. I wouldn't be surprised to see it head up to 250 or even 275. Those are reasonable numbers for a tech company, or even 350 to 400 if you truly wanted to value it like a tech company should be valued. I mean, look at these numbers. Do your math on the price to earnings on 62 for Amazon compared to how cheap this price is for how much earnings they have. Been through 2 years where they've made all sorts of money, and because Trump decided to tweet a bunch of mean things about China and do a China war, trade war, and all of that stuff, and then coming back with tariffs and different the whole trade agreement they had. None of that really mattered to Baidu, and they still kept making money. And so, in my opinion, they've got a couple of years worth of earnings and value that are completely not shown in or reflected in the price today. So excited for that one. See where it gets us. Not seeing any questions on it, so I hope I answered the questions as best I could there. Where will our markets end this week? Might be lower. Let me see. So the current headwinds, I don't know that they're completely off the table. I did like to see technically this bounce on a 50-day on our S&P. But if we don't hold some of these pivot points more than a couple of days, and if we see a testing again of the 50-day, I could see it struggling to be positive for this week. Let's see. That was the Dow. We're bullish. Markets will end lower. Bullish in general. That was the S&P. Let me go back here. We had the wrong picture up for the Dow. So technical bounce a little nicer for the Dow. Didn't quite get it to the 50-day. Now we're kind of stuck between pivot points. Definitely have to see that break on the upside, the pivot points, to see some strong reasoning of why it could continue to be positive, why it could be positive for the week. But that's a headwind technically. S&P was a little different, has to hold a pivot point. And then we come to the NASDAQ. Which we have a bigger headwind here with the 50-day up at 13,500. And really, this is a pivot point support where it bounced, but it's also no man's land between the 50 and 200. So not exactly loving what I'm seeing in the NASDAQ, especially if we're looking at our apples and so forth. What I am happy to see is that after we've had this sell-off, there's a little more excuse for some dip buying, which is what I was hoping to see follow through today, and we really didn't. So the next few days are going to matter, and let's see. Especially as we have earnings, still have some good companies to look at that could move things. We got Walmart, Baidu, as I mentioned, tomorrow, Target, Cisco. Target I'm really interested in, CCL, I forget the name of the Carnival I'm interested in seeing. So that's kind of it. Got some other tickers in case you're interested, but those are the ones I'm looking at, and I think those will help us understand where our markets will be. Where we end up in May? Well, 4% is what I'm saying. We got helped with the fact that it's come back down so far. Not so much at the beginning of May. Further on the couple weeks though. This dip could be, as I said, a good excuse for some more dip buying, and will certainly help push it higher. As you know, we talk about markets never head straight up. They zigzag like this. If it gets kind of crazy and way further than our simple moving averages, way further than with RSI being overbought, it helps to see a pullback where other investors are looking for an excuse to buy the dip, and less of an excuse when it's up at these levels. There we go. Any questions on earnings or where I think we'll be? Anything you guys disagree with? Economics, I mentioned housing. Monday, the NAHB housing market index came in as level. So we'll look at housing starts and building permits from April tomorrow. Wednesday, we got MBA. Thursday are jobs initial claims and continuing claims. And existing home sales Friday, and the important one for us is option expiration. Friday the 21st. How am I looking to trade? We're still in the earnings mode. adding protection where we need. We've kind of been with a higher volatility, wanting to protect things like Bank of America. Kind of got up here, added protection on the big down day at 41 in case it decided to come back. And if we get another good day of a bounce, we'll probably let that go and take those off to see if we can't head closer to 43, 44. But also kind of getting close to that overbought where we would want to consider just leaving things alone in case we get some selling from overbought. Baidu, we looked at possibly rolling some puts at 215 down to at the money. We kept them in place just to be safe. Gives us a little more help on the way down, just because there's so much uncertainty with Baidu. I would think it would be smart for everyone, as I've laid out with the majority of our time this evening, on why Baidu should definitely be heading up. Some pretty convincing reasons if you asked me, but as we know, the market doesn't always agree, and geez, kind of stupid, but we just kind of got to deal with it until the story changes. Couple interesting articles. This one's kind of funny. JP Morgan fires back at Morgan Stanley and recruits a bunch of their advisors. I thought that was kind of hilarious. Elon Musk clarifies that Tesla has not sold any Bitcoin. I think the story is that they really just stopped accepting Bitcoin for the purchase of cars. So that's one for all of you guys that love the Bitcoins and the Tesla and the Elon Musks. I actually kind of like the guy. I think he's interesting, creative, business-wise, and kind of a maverick that likes to shake things up. I also kind of think it's pretty funny that most of their profit came from how they've front-run Bitcoin, in my opinion, buying and selling. Governments are deploying wartime-like efforts to win the global semiconductor race. You've heard about some billion-dollar amount that they're going to throw. I want to say it was 80 billion or 80 billion. I think it was 80 billion to throw at the semiconductor companies from our government to try and win back more of that industry. So this is an interesting article. South Korea became the latest country to announce a colossal investment in the industry last week, probably, as I mentioned, response to what the U.S. is doing. The nation's government said Thursday that 510 trillion South Korean won, which is roughly 452 billion, will be invested in chips by 2030. Bulk of that will come from private companies in the country. So I guess if the U.S. is really wanting to play this game, they better pony up, I guess, is what we're saying. Good one for you guys to read. Another one just on Dow dropping 100 points, start the week. Tech shares lag. If you want a little more info on that, This one, my pictures didn't come out, so we'll see if I can get that fixed when we post. But this just goes over details of the consumer price index if you guys are wanting to get a little further into what makes that tick, especially since our inflation is kind of the word of the year so far. So I think that's it for me. Yeah, I believe that's the last article. Guys, thank you for hearing me mumble and babble on about all this stuff. Any thoughts or questions that you have before we call it a night? No problem. Thanks, Abraham. Looks like some questions coming in. Yep, no problem, Jim. Absolutely. Thank you guys so much. It was nice to be with you this evening. Have a good night. Come back tomorrow. Ida has a question. Any stock to benefit from rising lumber price? Well, I mean, I guess the housing companies are just going to pass that price onto their home buyers. What's Lumber Liquidators? Is it LLD? Nope. All right, let me search for lumber. That's not helping. Give me a second, Ida. I think I said lumbar, not lumber. That might have been why. I don't want that either. LL. Thought that's what it was. What did I put? LLD. Well, it certainly doesn't look like they're benefiting from higher lumber prices, at least as far as their stock chart looks. Take a look at this. High prices don't necessarily mean the company is doing better. Downgrade from Morgan Stanley in the beginning of the year. Let's see. Terrible operating margin, profit margin. Yeah. That's not going to help you. I guess my answer is you probably missed that one on the way up here. But I can't think of anything else on the top of my head, Ida. I certainly wouldn't invest in that. Any other questions? Not seeing anything come over, guys. I really appreciate it tonight. Thanks again. And I'll be listening in to Kevin tomorrow night. Have a good one. Take care. Oh, Jim says much of our lumber comes from Canada. They have been shut down. COVID. That makes sense. Thanks, Jim. I wasn't aware of that. I guess that makes sense. Of course, Canada. That makes sense with how much inflation is and how much that price is inflated. All right, guys, take care. Have a good night. See you tomorrow.